In this video I'm going to be talking about candlesticks, but my goal is to really talk about the forces behind what makes the candlestick that we're looking at. And so briefly I'm going to show you some candlestick patterns, and then I'm going to go to a chart that will give us, that I can talk about some forces and identify with what may or may not be happening in the marketplace. I also will be sharing with you typical trading activity for a green candle and the typical trading activity for a red candle. And just to identify those, a green candle typically, whether it gaps up or gaps down or is close to the previous close, it typically opens and goes down and then goes up and it ends up green. A red candle is the opposite. It opens, it goes up, and then it goes down and ends up being a red candle. So the activity pathway of the candles are different. But if you're looking at an open and that candle is moving in one direction, you can just verify that if you think you're going to have a green candle day, and it goes down when you open up, and sometimes they only go down, a nickel or 5-6 cents. But in any case, and obviously that's not true with every candle. There's a good percentage of the time that activity pathway is as I described. We see it. We significantly see that activity going that way. You got green flat bottom candles, and you got flat red top candles, and there's all kinds of other candles as well. But that's generally speaking the trading activity pathway that the green candle takes and the red candle takes. The chart that you're looking at right now is just a green candlestick and a red candlestick and a couple of patterns on it that I'll run over. On a green candlestick, you got the open at the bottom of the body and the close at the top. The red candle is open at the top and close at the bottom. You got tails, upper and lower tails. Some people call them shadows. Over here, down here, you got hammers. This is a bottom of the cycle hammer where the body of the is about one-third the size of the tail. So in other words, the tail is 2 or 3 times longer than the body, and there's no upper tail or very small upper tail. And they call it a hangman when it appears at the top of a cycle. You got spinning tops. That's a battle between the bears and the bulls, and they can appear anywhere, but they can appear in places where they'll oftentimes define tops and bottoms, and they appear like they're just right in the middle of nowhere sometimes. But looking closely, you might identify them and be able to see that not always, but oftentimes they too can be a reversal pattern. Shooting stars are up here on the top of the cycle, and inverted hammers, they call those at the bottom of the cycle. You have dojis or doji stars, which are basically an open and a close within a few pennies apart, so it looks like a T or whatever. You have haramis, or it's basically a Japanese word for pregnant, like you have a mother and a child. At the bottom of the cycle, the child is in the, if you divide the mother or the green candle in half, the baby would be in the lower half. At the top of the cycle, again, you divide it in half, and the small green candle would be in the top portion. And that's another good reversal pattern. Neckline, or some people give it different names than that, but that body is it may have opened up at the same point, I mean previous close to a regular close, but it ends up with the body below that. When they open and close it, when they previous day's close is the same as the opener, that often will be called a tweezer. Then you have dark clouds and piercing patterns. You got morning stars, evening stars. There's probably 50 or 100 more that you know, at this point I'm just not going to talk about. But I wanted to just briefly cover a few of those so that we had a little bit of an idea of what things are called. My main, as I indicated earlier, my main goal is to talk about the forces and just kind of just make you think about what's happening in the when you look at a candle. And we'll take a look at we'll take a look at a few of them right here. I'm going to start right over here. This is a basic you know, uptick in a downtrend, and the next day we have a gap up, and we have a real small upper tail, which is perfectly normal for a red candle. It gaps up, it goes up a little, and then boom, it starts down again. So if your indicators told you that that downtrend was going to continue, which in all likelihood it would, then you're going to have a red candle the next day. And so part of your thinking is to identify with that trading activity pathway. Because if you think you're going to have a red candle tomorrow, then you can get on your 1 minute or 3 minute chart and deal accordingly with when to enter that position. There's two of those, probably you might say 3 of those there. Right up here is the same thing. We got a spinning top up there. We've had, there's 4 green candles before this spinning top. There was a significant fight between the bulls and the bears here. You got really long tails and a short body, and it's just in all likelihood this would go down, especially since you've got 2 long green candles. I mean, the bulls really gained a lot of ground on these 2 days, and it's just logical that they might be out of bullets, as I say, you know, and basically out of stock, or whatever the case may be. So boom, it goes back down. Another, just moving over to this side over here, is the same thing. You got a day in which you had a green flat bottom candle. So what you're basically dealing with a downtrend 5-6 days, and it continues down after this. You had a day on this day, the previous day here, where you have an extremely long tail, probably 3 times longer than the body. And what is it? It's a hammer. And having gone down only 4 days, your first reaction is, oh, this can't be the bottom yet. And then whatever forces there were, we don't know. But the opening day after this day was a huge gap down, almost gapped down 3/4 of the way to the low of the previous day. So we got a huge gap down, and it's a flat candle. And when you see that, you can identify that open is likely where it should be if it was trading all day long. And why the exchange decided to open it right down there, you know, obviously their motivation is to sell shares because they make the spread. And so bingo, what happens? You got a flat bottom green candle, and you can make significant dollars trading that day. It goes up significantly, and end of the day it can't be held. The bears bring her back down. The following day, same thing. What are you thinking that you've got here? I mean, it's pretty obvious. You've got the basic definition of a downtrend. You've got a lower high, which is this candle right here, the green one, This high is lower than the peak, and so unless the next day gets higher, this is the basic definition of a downtrend, a lower high. So I would be expecting a low to take place, and that's without looking at any indicators. And so what happens this day? It opens up almost the same as the previous close. Looks like it goes up about 10 cents, and bingo, we got a nice red candle at the end of the day. So your candle patterns and the candles that we see a few days before, or maybe even 6 or 10 days before, makes a difference in what we in how we think, obviously. But and before they had indicators, that's the way. The only thing they had to deal with was patterns that candles formed. And so one thing leads to another. We've got some significant indicators that are very sensitive that we can deal with today, and just give us a lot of insight into what's going to happen tomorrow or the next day. But going on to this next candle here, we see on the right, I'll move this out a little bit. This one here is a continuation of the downtrend. This one opens up and in all likelihood went down, looks like about 30 cents or 40 cents, and turned around and came back up. And so if you were thinking that it was going to come up with your indicators, it showed that it was going to be coming up. The exchange people, or I should say the computer for them, opens this thing up actually at or below the previous low. So that's a significant gap down when you open up below the previous low. And so bingo, it goes down 20, 30, 40 cents, and then it goes back up at the end of the day. So one thing that you have here on this next candle is you have a candle that it's a green, it's almost a green flat top. Its high is 11.53 and the close is 11.52, so it's actually a penny apart. When you have a green candle that finishes almost exactly at the top, there's two schools of thought. One says it's going to continue up, and the other one says it's going to really go down. And it usually, when it, I'm of the school that it's going to go down, but you will see it in both ways. But I think you see it more often when it goes down. Now, here is an example of, here's an example of one that went up, but it couldn't hold itself. The bears got a hold of it and pulled it back down. So again, it gapped down. It was a flat bottom. I should move it over. This day it gapped down. It's a flat bottom green candle, and then it goes up, and again it can't hold itself, so it comes back down. Over here we have a Harami, and that is a classic. And note that when you see these setups, or you see these candle patterns, they don't react the first day, or in this case here it hardly reacted even till the second day. But you can see the third through the 8th day, or whatever it is, it's just way up. And that's a classic pattern for that type of candle setup. So, because it's at the bottom of a downtrend, boom, it happens, and boom, it turns around and goes up. When you have a consolidation, couldn't think of the word here, have a consolidation like here, 3 or 4 days, it can make it even stronger in its push to go up. and hence this is a pretty strong uptrend for this stock. Back over here we have a small spinning top. Again, it's after a period of consolidation, and that's for a candlestick, that's usually a pretty good sign. The next day it's going to go up, but you know, again, I don't use candlesticks to trade, but I do use candlesticks to verify, because they just really, when you look at the different forces, I mean, you have to look at the highs and lows of the previous candles, but the most important thing is the open and close, or the body of the candle. And so that tells you a whole lot about the market pressure of that day. And so obviously we got a consolidation period here, ending up with a spinning top, and wham, the next day it skyrockets. So one other one I'll point out to you here is another spinning top, and that one is basically at the bottom of a cycle. Now, it's obviously a downturn in a uptrend market, but it's the third day, and it's a spinning top, and it's green. And it usually doesn't make a whole lot of difference, but when I see a situation where the third down should have been red, and it's green, because if it was red, it would have been lower than this day right here. But as it turns out, this green spinning top gives us a nice big candle the following day. And so you can help yourself verify things with candlesticks, but it's far more important to identify the pressures and think about the pressures behind what you see, because they're not in an island by themselves. They do have valuable information to share with you, but again, not as valuable as the indicator.